There's a secret strategy that profitable traders use to predict the market by only looking at two daily candles. And this strategy is a game changer, especially if you are a beginner or you have been studying Stacy Back style trading and you get more confused the more you try to understand his strategy. In this video, I am going to break down exactly what the 3-day cycle is. I am going to break down the 3-day cycle. We will also break down the timing window. We will also look at exactly where you place your entries and your exits, because frankly speaking, that was my biggest challenge when I was also learning the Stacy Back style of trading. If you are new to the channel, my name is Joseph. I've been trading for over 5 years and I work with Africans to help them quit their job. If that is you, book a quick call, link in the description. Alright, let's jump into the video. The 3-day cycle. So what exactly is the 3-day cycle? So it's very simple. It's a theory that states that when we have 3 pushes, so say for example, this is one candle, then we have another candle, and then we have another candle. There is a very high likelihood that we will get a reversal after the 3 candles. However, it states that after every 3 moves, we get a reversal. And I want to simplify it even further. So it just comes down to understanding candles and what exactly candles are telling you. So if this is Monday, because we are dealing with daily candles, what Monday does sets the low and the high of the week. Now I want you to notice that this is just one candle. It sets the high and the low of the week, which means it can also set the high and the low of the session, so long as you understand which candle you are looking for. For now, we are interested in the daily candles. Now, if you have the high and the low of the week, then if the second candle goes up like that, then you know there's a high probability that the next day price is likely to continue in the direction of the trend. So when you come to the market, you will be primarily looking for longs. So this is Monday. This is Tuesday. Now, after Tuesday, we look for a very specific pattern, and that is what we call a failed breakout. Now, a failed breakout is when price tries to go higher by breaking out of the previous candle's high, but then it closes back inside of that range. So what it does is that it leaves a wick on top like that. So now we have 3 days. We have Monday, we have Tuesday, and then we have Wednesday giving us a failed breakout. And sometimes Wednesday can give you your first red day. And all this is just showing you that we are about to get a reversal. Now, once you see a failed breakout, then you know that automatically on Thursday, there's a very high probability that we might go back up to the high of the week. Clear liquidity before going down and reversing. And your job now as a trader, having this information, is waiting for the market to go up like that. So you wait for the market to go up here, take your sell positions, and then let the move go down. It requires you to believe 100% in your strategy. Otherwise, it's going to be very hard. Now, I want to show you something very easy. It's broken down into two things. Now, the market goes up like that. The market goes down like that. Or the market just consolidates. Why is this important? This is important because in order for you to understand where the market is headed, you need to know what's happening. And here's a simple secret. If you have a candle, I like using bullish candles like that, and then the next candle is a bullish breakout candle, know that the next day we are likely to continue in that direction. However, if we have a candle and then the next candle is what we call a failed breakout, so price breaks to the upside but fails to stay above, then expect a reversal. And these are very simple patterns that everybody learns on baby pips. I think this is called the morning or the evening star pattern, which is very easy to identify. This one is just a continuation move. So basically, what we are talking about now, the 3-day cycle, for me, what I understood is that Monday sets the high and the low of the week. Tuesday gives you a failed breakout or a continuation breakout. And then the next day, we trade what the market told us yesterday. If it's a breakout, trade the continuation. If it's a failed breakout, trade the reversal. Now, I want us to go and look at the different examples. So we will go to the daily time frame. And I just want you to observe what's happening. Let's start here. Let's start here on June 20th. Notice that this candle was bullish. Notice that this candle here was bullish. And then what happened? The next candle was a breakout to the upside. Notice how price just follows the direction of the breakout. Now, let's see another example. This one is a good one. So we have Monday. Well, yeah, this is Monday. We have Monday setting the high and the low of the week. Then we have Tuesday breaking out, which tells us that Wednesday has a high probability of continuing with the trend. But then on Wednesday, price breaks out, then closes back inside of the range, giving us our first failed breakout, which is a signal that on Thursday, all you have to do is wait for price to do what? To come to the high of the week, clear liquidity, and then boom, look at that. It was an easy sell. So this is how exactly you trade. Another example. You can see here we have, this is Monday again. And then we have Tuesday breaking out. We have Wednesday breaking out. And then we have Thursday giving us a failed breakout. So it's this red candle. But also it has changed color, giving us our first red day. Which means that the next day, automatically come and start looking for sells. And you can see this move, it was a sell. So Monday, Tuesday, Wednesday, failed breakout, get a reversal. Now, once you get a reversal, how exactly do you now get into trades? This is where understanding timing window is very important. So we have 3 timing windows. We have Asia. The timing window for Asia is between 9 p.m. to 11 p.m. This is New York time. We have London, which is from 3 a.m. to 5 a.m. And then we have New York, which is from 9:30 a.m. to 11 a.m. And this is exactly when you come to the market. Why is this important? This is important because this is when we have the highest volume in the market. So if we have the highest volume in the market, it behooves you to trade then. Now, when you come to the market, what exactly are you looking for? So I will use an example of a trade we took on Friday. Now, on Friday, we came to the market at 9:30 a.m. New York time. So this is 9:30. Now, if we look at 9:30, using the same principles, what we do is we identify our first candle of the market open. So this is 9:30 candle like that. Then the second candle is a bullish candle. And then the third candle is a breakout to the upside. So once we see that, then we know we are headed in the direction of the breakout. So this is where you put your entry, this is where you put your stop loss, and you are targeting a 1:2 or a 1:3. Who cares? And you can see how this one moved nicely. Now, this strategy has about a 50 to 60% win. And this strategy changed my life forever because now I only focus on trading the session breakouts. The 3-day cycle helped me understand how candles move. And once you understand how candles move, then that's it. You just come to the market at the right time and you cash in or cash out. Anyway, if you got value from today's video, subscribe and I will see you in the next video. Peace out.